This is an analysis from Alpha Business Media. Today, we're looking at one of the world's great untapped energy resources and, the really complex web of money, politics, and infrastructure that's keeping it all locked away. It really all starts with this one number, 83,000 megawatts. That's the theoretical hydropower potential of Nepal. You have a nation that's blessed with a landscape that is, for all intents and purposes, a massive gravity-powered battery just waiting to be switched on. But this is where you see the core of the problem, right? Despite that enormous potential, the reality on the ground is that only a tiny sliver of that, we're talking around 2,200 megawatts, is actually developed. That's less than 3%. So the central question for this entire explainer is pretty simple. Why?
Okay, so to really understand the problem, we first have to get our heads around the sheer scale of the opportunity here.
So let's break these numbers down a bit. While 83,000 megawatts is the absolute maximum on paper, a much more realistic, economically feasible number is closer to 43,000 megawatts. But here's the thing. Even if you use that more conservative number, Nepal has only developed about 5% of its viable potential. That is a staggering amount of clean energy just being left on the table. And here's the real paradox. For a country with such immense water resources, its energy mix is still dominated by traditional fuels, things like firewood. On top of that, to meet its peak demand, it still has to import roughly a third of its electricity from its neighbor, India. It's got the solution right there at home, but just can't seem to unlock it yet.
So we've established the resources there. But look, for multi-billion-dollar projects like these to actually work, you need guaranteed customers. And this is where the regional market really comes into play. And boy, are the customers lining up. Nepal is just perfectly positioned between two energy-hungry giants. India has already signed a long-term agreement to buy up to 10,000 megawatts. And then you have Bangladesh, which is looking to seriously boost its share of renewables. They've set a goal to import 9,000 megawatts by 2040, and they'll have to use India as that crucial transit route. So this demand isn't just a theory, it's contractual. Now, the initial deal with Bangladesh is pretty small, only 40 megawatts, but it sets an absolutely vital precedent. At a price point of 6.4 US cents per kilowatt hour, Nepal's electricity is super competitive. I mean, it's cheaper for Bangladesh than other imported sources and even some of its own domestic power. This really proves the business case.
So let's recap. We have the resource and we have the market. This should be a simple success story, but it's not. This is where that promise runs headfirst into the peril.
Let's just use the West Seti project as a case study here. This 750 megawatt project has basically been a revolving door for foreign investors. A Chinese company shows interest back in 2009 and then leaves. Then the massive China Three Gorges Corporation takes over in 2012, only to also withdraw 6 years later. Now, an Indian state-owned company has signed on to try and, make it work.
And you gotta ask, why did a global giant like China Three Gorges just walk away? Well, the reasons get right to the heart of the issue. The numbers just didn't add up. The projected return on equity was too low, the whole financial model was deemed unfeasible, and the costs for things like resettlement were just way too high. You see, this wasn't some political whim. It was a cold, hard business decision.
And West Seti isn't some isolated case, not by a long shot. We see a very similar pattern across all of Nepal's biggest projects. You've got Arun 3 facing construction delays, Upper Karnali has hit major financing roadblocks, and the Budikandaki project even had its license revoked. This points to a systemic issue.
Right, so these project failures, they aren't just random bad luck. They are symptoms of a much deeper set of challenges that make foreign investors, extremely cautious. This whole landscape of risk is multifaceted. Investors are looking at political uncertainty, just suffocating bureaucracy, and major financial hurdles. But honestly, one of the biggest operational bottlenecks is infrastructure. Think about it. You can build the world's greatest power plant, but if you don't have the transmission lines to actually export the electricity, which is what we saw with Arun 3, the whole project just isn't viable. So the big question is, How does Nepal bridge this enormous gap between its vast potential and the pretty harsh reality of investor skepticism?
It all boils down to this one concept: investor confidence. This isn't about the natural resources, and it's not about market demand. It's the core belief that a country is a stable, predictable, and ultimately profitable place to sink billions of dollars for decades to come. And right now, that confidence is fragile.
So the path forward, it really requires a systematic approach. First, you have to radically simplify the investment climate. Just cut the red tape. Second, strategically prioritize infrastructure. Build the transmission lines before the power plants, not after. Third, you gotta strengthen the government bodies that actually manage these projects. And finally, learn from the past failures and make sure all future projects are based on realistic financial models from day one.
Which leaves us with this final question. The resources are absolutely undeniable, and the customers are literally waiting next door. But can Nepal actually execute the deep, difficult structural reforms it needs to win back investor trust? The answer to that is going to determine whether it remains a country of potential or becomes a true regional powerhouse.
This has been an analysis from Alpha Business Media.